Hi guys, welcome to another episode of Weekly Chart Breakdown by EU Analytics. Um, Last week I dropped a weekly market breakdown of what I was expecting for the market to do for last week. So this is another episode of this weekly chart breakdown. Before I do anything in the chart, I would like to give out what I'm expecting in the fundamentals for the week. Fundamentals for the week. The news we're expecting for this week and how it's going to affect the market this week. So let me quickly run through the fundamentals for the week. Yeah, so using first factory. Yeah, so by the time at the time I was recording this video was Sunday. So tomorrow Monday we're going to be having news on card. CPI news is going to drop on card. It has been forecasted at 0.2%. Greater than previous, which was 0.1%. Then we have a median CPI year to year, forecasted at 3.1%, previous 3.2%. Then we have the trim CPI year to year, forecasted at 3%, previous 3.1%. Monday, that's the major news we have on Monday, so it's on card. So this news is really going to impact any pairs that concern the Canadian dollar. A negative news A negative news for CAD is going to give any pairs that is against the CAD dollar to buy. Then on Tuesday, no major news on Tuesday. So then on Wednesday, we are going to be having wage price index quarter to quarter news on Australian dollar. It is forecasted at 0.8% for the previous, and we are going to also be having a CPI news on Great Britain pound forecasted at 3.6%, previous 3.8%. Then we're also going to be having FOMC meeting minutes. It's a news by the Fed. They're going to decide because, and guys, I have a good news for you. The US saw that reopens last week. Trump signed the deal to end the shutdown, so the US government is back in action. So I think this news is about the Fed debating for a rate cut at December, which we are not sure yet. So the probability of a rate cut is still very low, but I think this FOMC meetings is what is going to decide whether we're going to have the third consecutive rate cut by December. Then on Thursday, we're going to be having NFP. We're going to be having NFP news. I think this is it's going to be the September data or last month data. I don't really know. So we're going to be having NFP news on Thursday. This news is really going to impact the market because for a long time now we haven't seen any fundamental news for US. So I think this news is going to really impact the dollar, even the whole financial market. This news is really going to impact the whole financial market. Then we also have unemployment claim data is still on tentative, still hoping to come the same Thursday. Then on Friday we are going to be having retail sales for GBP month to month forecasted at 0.1%. Previous was 0.5%. Then also we are going to be having German flash manufacturing and German flash service PMI going to be released for the euro. We're also going to be having the manufacturing PMI released for GBP and also for USD. So this week I'll be looking very closely to the fundamentals because the fundamentals are really going to impact the market this week than technical. Yeah, because for a long time we haven't had a strong fundamental news for USD. So I think this week fundamental is really going to take over the market this week. Yeah, fundamentals is really going to take over the market this week. So let's go back to the charts and see what we have for this week. So firstly, I love to analyze the DXY first because it gives us the direction. It's like Google Maps. Google Maps first as if you are going to somewhere. Let's say you are transporting from US. No, not even US. I want to use that state. Let's say you are transporting from um Lagos to Abuja. Before going, you have to check if you are using that. If you are using by good, you have to check the best route to follow. The best route to follow. So that's the way this DXY, what I use it personally for. I use it to track the market to know where it's likely to move this week. Let me give you guys this way. A If you can get a clear direction for the DXY, trust me, it will cover 90% of the struggles you're going to have for other pairs. If you can know the direction for the DXY, you have got 90% of what to look at for other pairs. Once you can get the direction of the DXY, it has given you almost all you need to know in the market. All you need to know. Yes. So let me put down this chart. So last week, I said the market has been falling down, but we have been having a sign of retracement. Let me go to the weekly time frame so you can see the market has been falling down throughout this year. From the beginning of this year, the market has been falling down, but we saw a surprising chart pattern, a very strong chart pattern that formed between June and September, which was a double bottom. So market is falling like this, went up, came down, failed to break this low, and since then has been moving up. So the only thing to confirm this reversal is this zone here. Once market is able to break out from this zone, trust me, the dollar index is going to pump. It's going to really fly to this place. Trust me. If the market is able to break this zone, we're going up. Okay. So let's dive into the daily time frame to see. So if you get to the daily time frame, you see that the structure is very clear here. I see the market moving in higher highs, higher lows. I break down this last week. If you miss it, you can go back and watch it. Weekly market breakdown by Ion Analytics episode 1 is on my YouTube channel. Go watch it. So you see here the market has been moving up for some time now, but we're in the retracement phase. So basically with what I have here, I can see that the market is about to move to its original direction. Because throughout last week, it has been falling in retracement because many stop loss has been hit. Many stop loss has been hit last week with this retracement. But the smart traders, the swing traders, this is one of the opportunities I love swing trading. It requires a lot of patience, but it pays. It pays, guys. Patience pays, guys. Swing trading requires a lot of patience, but if you can hold on and hold up to the trade, you really enjoy the market being a swing trader. I'm not saying scalpers don't make money. I'm not saying day traders don't make money, but if you can hold on to swing trading, you go a long way. It goes a long way. So looking at this market, the market has given us a higher high, breaking the previous high, though it is now though it reject the high rejected from our major level, but that doesn't confirm the sell yet. I'm still bullish. My bias is still bullish on DXY. To confirm this, I will need the chart pattern to form here or market breaking the previous previous internal low, which it has not done yet. So you can see here market has given us higher high here. So I think this higher low is done. So I'm expecting market to move here from next week. I'm making this move here to give us another higher high. And how did I know? If you mark out, sorry, if you mark out the Fibonacci, so from the swing low here to the swing high, you can see the market is around the 50 to 61.8% Fibonacci level, which is a very strong zone for continuation. If I map out the Fibonacci from here, you see the market has been moving away from the 50 to 61.8. So I'm expecting the market to do the same here also to trace. So how do I enter this market? So all I do is go to the 4-hour time frame, see it. So you can see the 4-hour time frame. So what the thing I'm expecting for to validate this market is for the market to break. Let me draw this trend line for you guys. Perfect. So if market is able to break this internal trend line, trust me, sorry, if the market is able to break this trend line here, if a 4-hour candle close, a full body close above this trend line, you can look for your entry zone to take this market back up here. That's it, as simple as that. So a full 4-hour body candle close will give you a confirmation of the pump, of the upward bias, of the continuation of this, of the DXY. But generally we don't trade US dollar, we trade the single space. But like what I said earlier, if you can get the directional bias with the US dollar, trust me, it's going to be easy for you to trade other pairs. And lest I forget, I have a pair I want to give you guys. This pair is gonna is a popular pair, you guys know, but this pair is gonna move massively. I'm going to be dropping it in this video, so stay tuned. Make sure you watch this video to the end so you don't miss out this pair I'm going to be dropping. So now let me now go to the tradable pairs. Now I've given you guys the directional bias of the market. I'm expecting the DXY to continue its upward movement this week, and hopefully the news we have for this week support this technical. But like I said earlier, the fundamentals is really going to impact this market this week. Fundamentals are really going to impact this market this week. So this is my directional bias for the DXY. I'm expecting the market to stop its retracement and continue to the regional movement. So my second pair, my first tradable pair that I would like to give you guys is this NZD USD. So like I dropped last week on NZD USD, I've given guys I've broken down this market last week. I said why it's moving like this. I show you guys the trend already. If you missed the video, if you didn't catch up with it, go watch it on my YouTube channel, Weekly Chart Breakdown by EU Analytics episode 1. I dropped it last week, so go watch it, guys. So on this one, what I'm basically expecting is you can see the market has been giving us a series of lower lows, lower highs. So I'm expecting market to retrace to at least the 50 Fibonacci area from this low. Let me mark this out. Swing low, swing high to swing low. So I'm expecting a little bit of retracement before this market will drop. So let me mark this out. Then let me take this away. So I'm expecting the market to retrace to at least this level before coming down. Still expecting a drop to this level. So if you want to know why I'm choosing this level, go watch my YouTube. Go watch the last YouTube video I dropped, episode 1. You see the reason why I'm taking this. I'm taking the market to this level. So I'm expecting the market to retrace to somewhere around here, find my entries, then I'll sell. And based on what we have on the DXY, since we're expecting the DXY to move up, so that is the directional bias already for the NZD USD since we are trading against the US dollar. So um, that's what I'm expecting on NZD USD. I'm expecting market to give me a little bit retracement to somewhere around here, then I'll sell to this place. Um, my second tradable pair that I want to drop is this USD share. Mind you, I have not dropped the pair I was talking about. This is still my. I'm going to drop it soon after this. So you look at the USD it has been forming for some while now, just as the dollar. But we're seeing a form. Sorry guys, we're seeing a form of reversal here. So as you can see, the market has been falling down massively. Let me start on the higher time frames. Say this here, guys. Higher time frames is the best. So you can see the market has been falling down. Yes. Let me go to the weekly. Sorry, weekly time frames. Well, still same thing as the DXY. Market has been failing to break this level. First level touch, it reverse, came again, reverse, went up, came again, reverse. So this one is like a triple top. A triple top. So we're expecting the market to continue its movement of this to the upside. So we're expecting to the upside, and this is still the weekly time frame. So I'll dive into the lower time frame to give you how to enter this market. So if you go to the daily time frame, this is where you see the structure more clearly. We can see that the market has been forming a series of higher high here, higher high, higher low. That's one another higher high, equal low. So for so long, market failed to break the previous low. The trend is still active. So for so long, market failed to break this low. This pair is still active. You can take it to the upside. Take it to the upside. So let me mark the low for you guys. So this was the previous low. Market failed to break it. If I even use, let me go to the line chart. You see, same. Market failed to break the low. So I'm expecting a bullish momentum for this pair. I'm expecting this pair to move up from here. Expecting the market to move up to somewhere around here from here. So if you go to the 4 hour time frame, you can use your entry models to enter this market. I'm not going to be dropping my personal entry models where I'm going to enter this market, but I can see a way to enter this market now. But I'm not dropping it here. So I just want to give you guys directional bias. I'm not here to drop signals. I'm not a signal maker guy. I'm just here to give you guys the directional bias of the market. So this is my directional bias of USD CHF. I'm expecting it to continue its upward movement to the upside. Chart. So another reason why I think this pair is going to go up is because market has taken the liquidity from this support level here. You can see market took out the liquidity, and now it has given us a pin bar, a daily pin bar candle. Guys, the power of higher time frames, a daily pin bar candle. So I'm expecting the market to move higher this week. And remember guys, I told you guys, once you can get the directional bias of the dollar index, you have gotten everything. So since the dollar index has showed us that it's moving up this week, it's likely that the CHF, the correlated pair of the dollar, is going to move up with it. So now let me drop my banger pair now. The banger pair I was talking about that you guys, ladies and gentlemen, please officially welcome BTC USD. Yes. So this is the pair I want to drop. So before I start the analysis of this pair, I'll show you guys. I'll talk about this pair a little bit. So BTC USD Thirdly, as you guys know, BTC is a crypto coin. Um, I don't really trade it a lot, but I found a trading opportunity which I'm going to drop to the channel. That is the purpose of this channel, to give you guys the directional bias so that you don't get confused in your trading. So what I want to do on this pair is I'm going to give you guys directional bias, what to expect. So if you are an investor, if you are a trader, you know that you want to know where to enter, because let me say this: BTC is a pair that is only going to do well in the future. It's buy, but right. I won't advise anyone to sell BTC for long, because it's a future coin. It's a future coin, and many things support that. I don't want to dive down to those, but trust me, BTC is going up for a lifetime. It's going up in the future. It's going to be a good coin. It's going to boom. It's going to pump. Any name you want to call it, it's going to pull up. Any name you want to call it, trust me, BTC is going up. So now let me start the analysis for this one. So basically, as you can see, the market has been moving higher high. Mind you, this is a monthly time frame. Higher high, higher low, higher high, higher low, higher high. So these are we're saying this to be higher low. We're expecting the market to push up from here. So if I mark my previous high, my previous low, which is this level here, and my previous high, which is this level here. So this is the range where I'm expecting to look for my buy entries to take this market up. So the reason why I'm saying this market is done coming down, is done tracing, I'm expecting it to continue its upward movement, is if I mark out my Fibonacci from what market did the last time, from here from this swing low to this swing high, we can see that the market reacted very well to this 50 to 61% Fibonacci retracement area. As you can see, from the euro market, when it came down, it went up. So I'm expecting the same thing for here. So what I'm expecting in this one is, you can, if I do my Fibonacci from here to this place, you can see the market is around that area. So I'm expecting history to repeat itself. Yes, this is what I'm basically expecting for BTC USD. I'm basically expecting for the history to repeat itself around here. So I'm expecting BTC to stop retracing and continue its upward movement. Market has cleared enough liquidity to go up, but how do we enter this market? You can't just click buy or sell from anywhere. But once you can get the directional bias, you dive into the lower time frame and look for your entries. So let me give you guys a precise entry. So you move to the weekly time frame and see market is around this major supply level around here, and mark it down this level here, and give it on that candle, use black. And see market is around that level here. So this is the level I'm expecting for market to reverse. This is giving me a double confirmation. You can see now, guys. First, we went to the monthly time frame. You can see the market is in an uptrend. That is the first conference. Second conference, market is in a major support level. Second conference. So you can see, guys, trading is simple. Once you can make all your conference align to one place, you can get 3 to 5 conference aligning in one place. There's no point of complicating trading. And this thing I'm using to analyze is basic price action, support resistance, market structure, candlestick confirmation, basic things of the market, basic things of the forex market that I'm using to analyze this market. So you can see, guys, I'm expecting market to react to this support level. And if you go down to the daily time frame, that's where you see how to enter this market. So if I dive into the daily time frame, I can see this market, the retracement has been coming down clearly. You can see something like this. And see it has been coming down. See, but I'm expecting the market to stop retracing now and continue its upward movement from here. But I'm not the market maker. I'm not gonna decide for the market. But this is the way I'm going to enter this market here. If I map out my trend line, from here. Yes. Let me take this away. Yes. So a daily candle, full body candle closes above here. Guys, trust me. And this market is going to go back to this level. If a daily candle can close above this level, guys, trust me, this market is going to this level. And let me show you guys something to confirm this. Let me show you guys something to confirm this. If you go down to the previous one, you can see the market, this previous retracement level before markets rally up. If you go to the daily time frame, let me show you guys why I said it's to repeat itself. The same thing that I'm showing you guys here happened here. So you can see this previous retracement here. If I map out my trend line from somewhere around here, you can see after the market gave us a bullish candle close above here, which was around here. After this full body candle close here, you would have just taken a buy from here and take the market back to this one. You can see this was the previous retracement that happened. So I'm expecting what happened here to repeat itself in this future here. See guys, see the power, see the power of history in the market. So if a fully candle daily close just like the one we had in that one close here, I'm taking this market. This market is likely to move up to this space 124,717 and even give us another higher high, because like I said before, Bitcoin is going to pump in the future. Bitcoin is going to pump in the future. So guys, if you see a daily candle close above here, go down to the lower time frame, get the market and swing it up. Swing it. Don't scalp. Swing it up. Swing the market up. Just get your precise entry and your stop loss in place with proper risk management. Swing this market up. So what I'm basically expecting is this market to break this place. Once it's able to break this place, break this trend line, once able to break this trend line, I'm expecting it to move up, to continue moving up, just with the directional bias we had in the monthly time frame. So that's what I'm expecting for BTC. I'm expecting it to break this trend line before moving up. Yes. So before I stop the video, let me wrap up what I've said so far. So said on DXY that the market has moving, expecting the market to break this trend line DXY to continue its upward movement. On NZD USD, I'm expecting it to give us a little form of retracement for selling down. Then on USD CHF, I'm expecting it to start moving, start rally from this week to move this market up down, to move this market up, to move it up back. Then on BTC, I also said the market can break above here, expect it to move up. So let me drop this final pair on Euro USD. So Euro USD is just like the inverse correlation of this price I sent in the last video. You can go watch it. Weekly chart breakdown by EO Analytics episode 1. I drop it on my YouTube channel, this YouTube channel, so you can go watch it to see what I said about it. So I'm expecting the market to come down, to continue its drop here. But how do I enter? We go to the 4-hour time frame, you see your precise entry to shock the market. Let me drop this one guys for you. So what I'm expecting for this is something like this. So I'm expecting the market to give us a break below this level here, the weak text, then we sell. And I want this weak text to be in confluence with the Fibonacci level and mark out the Fibonacci. Plus this confluence, I'm expecting this market to drop down here for Euro USD. So thank you guys for tuning into this channel. If you haven't subscribed to this channel, please do so. Anytime I drop a video like this, you'll be able to be notified fast. on what to do in the market. I drop videos regularly Sundays before the market opens, so you know what to expect in the market for the week. So thank you guys for tuning in. Yeah, and if you haven't liked this video, please do so to like it. Thank you guys. It's EO Analytics, and bye.